It's 8:42 a.m. You're in line for coffee when your phone vibrates. Temporary withdrawal limits in effect. You try again. Declined. The barista says it's happening to everyone. Across town, a crowd forms outside your bank. The doors are locked. An employee tapes a printed notice to the glass. You've worked 20 years for what's in that account. And now? It's still your money. You just can't touch it. How can something belong to you and yet be unreachable? Today, you're going to find out. By 9:15 a.m., your phone is blowing up. Your sister, your college roommate, 3 people from work, everyone asking the same question. Are you seeing this? You pull up the news. Major financial institution implements emergency liquidity measures. The article uses words like temporary, precautionary, and orderly process. None of these words explain why you can't buy coffee. You try calling the bank. The automated system has a new message. Due to unprecedented call volume and temporary operational adjustments, please visit our website for information. The website loads slowly. Too many people are trying to access it simultaneously. When it finally appears, there's a banner across the top. Daily withdrawal limit, $500. Digital transfers suspended pending system updates. We appreciate your patience during this brief adjustment period. Brief. That word does a lot of heavy lifting. You have $43,000 in that account. You know the exact number because you checked it yesterday morning, the same way you check it every morning. It's a ritual, a small reassurance that you're doing okay, that the years of careful budgeting and disciplined saving have accumulated into something real. Except now you're learning a disturbing truth. It was never as real as you thought. By 10 a.m., you're at the bank anyway, so are 200 other people. The doors are locked, but 3 security guards stand inside. You recognize one of them, Marcus, who's worked there for years, who always asks about your dog. He won't make eye contact now. A manager you've never seen before comes to the door with a megaphone.
"We understand your concerns,"
she says, and her voice cracks slightly on the word concerns.
"The bank is implementing a structured access protocol. You can withdraw up to $500 per day at our ATM locations. Digital banking services will resume once our systems complete necessary security updates. This is a temporary measure to ensure stability and protect all our customers."
Someone in the crowd shouts, "When?"
"We'll have more information within 48 hours.
That's not an answer. The manager retreats inside. The guards remain. You notice one of them has his hand near something on his belt that isn't a flashlight. You think about the word protocol. Organizations use that word when they've planned for something in advance. This wasn't a surprise to them. They knew this was possible. They prepared for it. You didn't. By noon, you're at the ATM. The line stretches around the block. You wait 90 minutes. When it's finally your turn, you request $500. The machine makes concerning mechanical noises, then dispenses $300. A message appears. Daily limit reached. Thank you for banking with us. You've been a customer for 16 years. You've never been late on a payment. You've never overdrafted. You've recommended this bank to friends. And today, they're rationing your own money back to you in $300 increments. Your phone rings. It's your landlord. Rent is due in 4 days. $1,850. You've never missed a payment. You've set up automatic withdrawal for the past 7 years. "I'm seeing news about the banks," he says carefully. "Are we going to have a problem?" You want to say no. You want to explain that you have the money, that it's sitting right there in your account, that this is just a temporary technical issue. But you realize you can't actually promise him anything. You don't control your own money anymore. Someone else does. "I'll figure it out," you tell him. "You've got 4 days," he reminds you, and hangs up. You sit in your car and do the math. $300 today, maybe $300 tomorrow if they don't lower the limit, maybe $300 the day after. That's $900. You're $950 short, And that's just rent. That doesn't count your car payments, your insurance, your utilities, your groceries. Your carefully structured financial life is collapsing like a Jenga tower, and you haven't even removed a piece. Someone else just changed the rules while you were playing. By 3 p.m., you're talking to David, your friend who works in financial analysis. You meet at a park because somehow being outside feels safer than being inside for this conversation. Fractional reserve banking, he says, and he sounds tired, like he's explained this too many times today. You know what that means? Not really. Banks keep maybe 10% of deposits. The rest gets loaned out. That's how the system works. Your $43,000, most of it only exists as numbers in a computer. It's been loaned to other people, invested in securities, leveraged in ways you don't even understand. He pulls out his phone. FDIC has about $125 billion to insure roughly $10 trillion in deposits. If multiple major banks failed simultaneously, that fund would be exhausted in hours. So what am I supposed to do? Nothing, he says. There's nothing you can do. You're not in control here. You never were. He shows you something else. Cyprus, 2013. Deposits above 100,000 euros lost 47.5% overnight. Greece, 2015. $60 daily limit for weeks. Argentina, 2001. Accounts frozen for a year. Lebanon, 2019. 4 years later, people still can't access their full savings. You feel something cold in your stomach. That was other countries, unstable economies. Every economy is one crisis away from being unstable, he says quietly. By 7 p.m., you're scrolling through social media and it's complete chaos. Everyone has a theory. Government conspiracy, Chinese hackers, derivative exposure, commercial real estate collapse. Nobody knows anything for certain, but everyone speaks with complete confidence. You see a video of a woman in her 60s crying outside a bank branch. "I have $87,000 in there," she says to the camera. "That's my life. That's my retirement. I worked as a nurse for 40 years. What am I supposed to do?" The comments are split between sympathy and condescension. Should have bought Bitcoin. Should have kept cash at home. Should have diversified. Everyone's an expert in hindsight. Nobody acknowledges that this woman did what every financial advisor, every government agency, every responsible adult told her to do. She worked hard, she saved diligently, she trusted the system. And the system just changed the rules. You think about your own retirement account. Another $120,000 locked in a 401k. You can't even access that without penalties. And even if you could, it's just more numbers and more computers controlled by more institutions you don't control. Your entire net worth is theoretical. It exists as electrical signals and database entries. There's nothing you can physically hold except the $300 in cash you withdrew this morning, which is already starting to feel like the only real money you have. Day 2. The ATM limit drops to $200. No explanation, no apology, just a new message on a screen. You call in sick to work. You can't focus anyway. You spend the morning trying to figure out how to pay rent with money you own but can't access. You consider asking your parents for a loan, but they're probably in the same situation. You think about credit cards, but the cash advance fees are predatory, and besides, what if those get frozen too? You drive to a different bank, where you have a small emergency account. $5,000 you've kept separate just in case. There's a line there too, shorter but tense. When you finally get inside, a banker informs you that due to sector-wide coordination on stability measures, they've implemented similar protocols. "This is a different bank," you say stupidly. "Yes, sir, but we're all working together to ensure systemic stability." Systemic stability. Your individual catastrophe is their statistical necessity. You withdraw $200. It takes 45 minutes. The teller's hands shake slightly as she counts the bills. She's young, maybe 24. She probably has student loans and rent and her own financial fragility. She's watching the same system crumble, except she has to smile and pretend it's all temporary while she processes your desperation. Day 3. You meet someone at the ATM. He's in his 70s, wearing a Vietnam veteran cap. He's trying to withdraw money and becoming increasingly agitated with the machine. "Can I help?" you offer. "Damn thing only gave me $100, he says that's the new limit. $100? What am I supposed to do with $100? You notice his hands trembling, not from anger, from something else. "I need my medication," he says quietly. "I have diabetes. My prescription costs $340. I have the money. I have $28,000 in that account. I just need to access my own goddamn money to buy the medication that keeps me alive." You don't know what to say. There's nothing to say. I didn't fight in a war to come home and be told I can't access my own bank account. You know what I thought about America when I was in those jungles? I thought about freedom. I thought about a country where you own your property and nobody can just take it from you. And now I'm 72 years old and I'm learning that was a lie. I never owned anything. They let me think I did, but the moment it's inconvenient for them, they just change the rules. He walks away slowly. You watch him go and wonder if he'll get his medication. You wonder how many people are making similar calculations right now. Medication or food? Rent or electricity? Which financial catastrophe can you afford today?
Day 5. Rent is due. You've managed to scrape together $1,400 through daily ATM withdrawals and the cash you had at home. You're $450 short. You meet your landlord in person to explain. He's sympathetic, but firm. "I have a mortgage on this building," he says. "If you can't pay, I can't pay. Then the bank takes the building. This doesn't end with you, it cascades." Everything cascades. That's what you're learning. The interconnectedness you never thought about is now perfectly visible. Your inability to access your money means you can't pay rent. Your landlord can't pay his mortgage. His bank faces more defaults. The banking crisis deepens. More freezes, more limits, more people unable to access more money. The spiral tightens. You negotiate a payment plan. He agrees, reluctantly. You have 2 weeks to come up with the difference, or he starts eviction proceedings. Legal, logical, and completely devastating. Day 7. The news finally reports what everyone already knows. This isn't temporary. 3 major banks are insolvent. The liquidity measures were just the first step. The government announces a structured intervention plan. Deposits above $250,000 will be subject to burden sharing arrangements. That's the euphemism they use. Burden sharing. Not confiscation, not bail-in, burden sharing. You're under the threshold, but it doesn't matter. The precedent is set. Money in banks isn't really yours. It's conditional, revocable, subject to rules that change when the people who make the rules decide it's necessary. You think about all the things you believed about society: property rights, rule of law, the sanctity of contracts. You believed in those things the way you believed in gravity, fundamental, unchangeable. But gravity is physics. Those other things are just agreements, and agreements can be modified when powerful people decide modification serves their interests more than honoring the original terms serves yours. Week 2. You're adapting. Everyone is adapting. Cash transactions are suddenly everywhere. People trade favors. Barter emerges naturally. Your neighbor fixes your car in exchange for the expensive coffee beans you panicked bought before you understood how long this would last. Society doesn't collapse, it transforms. But you're different now. You look at your life differently. Every automatic payment is a vulnerability. Every digital transaction is a permission you're requesting, not a right you're exercising. The number in your bank account is a suggestion, not a guarantee. You've worked 20 years. You've accumulated numbers in a database. You thought that was wealth. You thought that was security. You thought you were building something solid. But you were building on sand, and today the tide came in. Your money is still there, technically, all $43,000 of it, minus the small amounts you've withdrawn in $100 and $200 increments. But there isn't really anywhere.
It's not in a vault, it's not under a mattress. It's a series of ones and zeros that someone else controls. Someone else who can decide whenever they want that you can't have it. For your own good, for systemic stability, for the greater good. And the cruelest part? You did everything right. You were responsible. You were prudent. You saved instead of spending. You planned instead of living impulsively. And none of it mattered. Because the system you trusted was always one crisis away from revealing its true nature. Not your partner, not your protector, just another entity with interests that occasionally aligned with yours, but were never actually the same as yours. You lie awake at night now, doing different math than you used to do. Not how much do I have, but how much can I actually access? Not am I saving enough, but what portion of my theoretical wealth could I convert to something real if I needed to? This is your life now. This is everyone's life now. Wealth is theoretical until you can hold it. Security is an illusion until it's tested. And freedom isn't something you have. It's something you're allowed until you're not. If your bank froze withdrawals tomorrow, what would you do first? Comment below. And if this changed how you see your savings, hit subscribe, because understanding the system is the first step to protecting yourself within it.